PRC Equity Fund targets a 10% annual dividend payment to be paid monthly and will pay 70% of the annual profits earned by the fund to investors. How does PRC Equity Fund generate revenue? Step 1. We meet with the Texas Public University leadership to discuss the current need for housing. The university shares the number of student beds needed and the target date for delivery. Step 2. The university signs a letter of intent that promises to refund pre-development expenses to PRC Equity Fund if the university decides not to move forward with the project. Step 3. PRC Equity Fund pays pre-development expenses to include land acquisition costs, third-party reports, design consultants, and legal expenses. Step 4. PRC Equity Fund negotiates master leases with the university. Step 5. University signs master lease. Step 6. A municipal bond transaction is closed and funded. Step 7. Proceeds of the bond transaction returns the pre-development expenses back to the fund at a 100% or 2x return. For instance, if the fund invests $2 million for pre-development expenses, it will receive $4 million from the bond proceeds. Step 8. The remainder of the municipal bond proceeds are used to construct the student housing development. Step 9. When the construction is completed and the university takes possession of the property, remaining municipal bond proceeds after all construction costs are paid to PRC Equity Fund. Step 10. University makes rent payments and 90% of rent payments are used to make the municipal bond payments, and the remaining 10% is paid to the fund. So the fund earns revenue in 4 ways. 1. A 2 times return of pre-development expenses. 2. The difference between municipal bond proceeds and construction costs. 3. The difference between university rent payments and municipal bond payments. 4. Interest income from cash balances on the fund. For more information about this investment opportunity, please download our investment deck at www.prcequityfund.com.